Hey guys, Stock Saturday, and it's a very slightly green week for me, about 1%, slightly behind the market. I believe S&P and Nasdaq both sort of done just above 2%, so nothing too much to worry about there. I have made quite a few large changes, which I will come back to shortly. Just one result that's come out this week from what I could see. Prosus. So this is sort of my proxy for Tencent for newer people. And yeah, look, the big news seems to be that they're trying to simplify their sort of complex cross-holding structure. So they're sort of owned by Naspers, the South African company, and Naspers own some of the Prosus shares. Prosus own some of the Naspers shares, and it's all sort of a little bit complicated. And then Prosus own all of their stake in Tencent. So it's sort of always been a bit of an issue. The Naspers stock gets a little bit too big for the South African Stock Exchange, so that's why they've been trying to sort of make it a little bit smaller and sort of put some of that value on the Amsterdam Stock Exchange through Prosus. But yeah, they think they can simplify this a little bit and hopefully unlock some of that value because there is still quite a heavy discount between them and the sum total of the parts, if you like, which there always is on conglomerates. I've sort of been through quite a few now, sort of Samsung and Sony, and sort of a number of companies really. The biggest one, I guess, being Berkshire Hathaway. If you sort of add up like basically everything they've got, it comes to quite a bit more than the market cap. If you put a reasonable multiple on sort of their earnings, but yeah, people don't like conglomerates basically. So the other thing being they do still have other businesses other than Tencent, of course, and they're very much in sort of food delivery and classified ads, as well as sort of the payment side, which I'm not really that keen on, and the education sector, which I am rather keen on, especially the Stack Overflow they bought, which is quite interesting, sort of a computer programmers forum from what I can see. Which is sort of seems to be quite good. And revenue growth, at least on all of these, has been very, very good. So potential for those to become sort of worth a lot more in the future. They're not profitable, of course, because they are sort of young growth companies, but they see a path to profitability in looks like first half of 2025. So often these are sort of optimistic estimates from the company, but yeah, they've seen results improve in this half compared to last half, and yeah, obviously increased revenue has meant increased losses compared to sort of a year or two ago, but that is the way with growth companies. It's not really something that I'm generally keen on. Certainly don't invest in very many myself, but they seem to be sort of potentially able to pull it off. Obviously, they've done it once in Tencent and not really had a massive success anywhere else. But yeah, certainly for the future, it's potential and not just a Tencent investment. But speaking of Tencent, they are still, it seems, selling shares and buying back their own stock, and they're going to continue doing this for another 2 years, and they think this will improve NAV per share alone by sort of $109 before the buybacks to 131 at the end of year 3, assuming sort of nothing else moves, which obviously it will, but if you said on a constant basis, they think this will sort of give them back a lot of value, basically sort of getting back sort of 70p to unlock £1 worth of value, sort of if you look at the sort of heavy discount. So yeah, potential there. Not a huge amount else sort of gone on with them. They did do a fairly pointless sort of slide on AI and try to pretend that they're an AI company. Obviously, there's going to be small amounts of that used, but they're nowhere near an AI company. So yeah, that was Prosus. Not a huge amount sort of there, but interesting to see what this sort of unwinding of the cross-holding structure could bring. So just jumping to the interactive brokers side, a couple of people have sort of asked about the options that I'm in, and I've thought I might as well just put them here, what I'm currently in, and sort of you don't get quite as much information because I'm not able to pull prices from the market itself, but yeah, this is what I'm currently in. So it's sort of basically stocks that I already hold: CleanSpark, Kua Mining, Fortuna Silver, Himax, and Equinox Gold. And yeah, you can see sort of value that I'm putting into these at the moment. And yeah, it's sort of a bet on gold and silver and a little bit of Bitcoin, really. Plus Himax, just sort of I like to keep there. But so to give you an example of what I'm doing, so Kua Mining is one of the biggest. I've got nine contracts on them, and yeah, it's basically they're $2.84 at the moment, and I'm sort of buying mostly December 2025 options for a $5 strike. So basically betting that Kua is going to be over $5 by December 2025. So it's 2.5 year bet. It's quite a long time. You can exercise the options if you like, which means you're taking possession of the 100 shares, or you're buying 100 shares any time before 2025, December 2025, and you can buy them at $5. So if it rockets up to say $10 before that time, you can exercise your option to buy them at $5, and you can either keep them or sell them immediately for whatever profit you make. So say they're $10 by that time, buy them for $5, and you sell 100 shares for $5 profit. So $500. That's basically the crux of it. You can come on to somewhere like Options Profit Calculator and sort of get a bit more of an idea of sort of what you could potentially make at different prices and sort of buying different options. So I've put in Kua Mining here, just hit get price and sort of double check that you have got the right one. Share price matches, and the ticker is CDE, and yeah, that gives you Kua Mining, and you can say select which option you would like, and it brings up this sort of little panel here. You can't buy them from here. This is just to give you an idea of what's on offer. You buy them on Interactive Brokers, and I put the 19th of December 2025, so 2.5 years away. There isn't exactly a huge amount to choose from on this because it's sort of not a huge stock. But not many of the ones I was looking at give you December 2025, so that is quite nice. And it'll say, so you can buy a call, this is for call options, a bet on the price going up basically by that time. And it shows you last price was $2.84, current price. You can actually buy call options below the current price if you want sort of a little bit more safety, but it's not really something I'm sort of keen on, that sort of leverage with a bit of safety, and you do sort of pay quite a lot for it. So all of these prices are have to be times by 100. So if you want to sort of say it's going to be more than $1 in 2.5 years, even though it's $2.84 now, you'd be paying $265 per option, which is sort of quite a bit. But if we said, so my option is $5, if you were to, I think I got them at $60 rather than $65 here. So it's $0.65 times by 100, $65. But if I said I got them for 60, and then if we said sort of 10, say it goes to $10, then calculate that, and it gives you sort of a range on when you'd be buying them. This is sort of an indicative range of prices when you'd be buying them. If you buy them at expiry, then you're just getting the exact price that it's gone to, and so they would be $500. One option for it going up from $5 to $10, so less your $60 buy is $440 profit. So that would be $500 divided by $60 purchase. That is an 8.3 times your money for a sort of what is a 3 1/3x from here, or sort of nearly about 3.6x on the share price. It's an 8.3x on the option. So that's basically how I'm looking at them at the moment. It's leverage on the stock without sort of the concern about downside. I can only lose $60 if you were to buy one. Say you can only lose your $60. They expire worthless. Say it expires, or say the stock is $2 in December 2025. It never goes above my $5 price. You just lose your $60. You can't sort of get margin called. You can't get people liquidating your other holdings because you've gone in the red. So I quite like that. It's leverage without sort of the risk, basically. You've got risk of losing 100% of your money, but that is sort of goes with the territory. I don't want to be sort of going on holiday and worrying about being margin called, basically. So that's quite a nice option. And the thought of sort of Coeur Mining going to what would this be, about 3 billion in market cap, which doesn't seem too out of the way when you sort of take I believe they're doing 280,000 ounces of gold and 10 million ounces of silver. So I sort of calculate about $1.5 billion potentially for both sides of that. And if we get a little bit of rise in the price sort of in the next year, I think we could sort of quite easily see 2 or 3, maybe more, $3 billion market cap. So $10 potentially by 2.5 years' time, I think seems more than doable, and that could be a nice option. So that's one of them, and then the others are sort of similar situation, basically. CleanSpark, I'm going for January 2025. Fortuna were, or all three of these actually are January 2025. So both of those are 1.5 years rather than 2.5 years. But we'll see where we go, and I will hopefully continue buying more. Got about £800 in cash sitting there ready to buy more. So we'll see how we go. So I thought this was an interesting one to highlight. The debt ceiling obviously was increased at the beginning of the month, and that was $31.5 trillion US national debt, and the treasury account was basically empty, and they were on special extraordinary measures, which sort of means not paying into various pension funds and postponing bills that you're allowed to. So that's not exactly very good and can't go on for too long. So they increased the debt ceiling, and since then it's been 3 weeks or so, and they've increased by 800 billion in debt. So they've issued a ton of new debt to pay off all of this stuff, basically, and refill the account. I have been thinking sort of I wanted to get out of my Treasury's position, and yeah, this just sort of reminds you why. Basically, you're lending money to the government, and by the time you get it back, they have sort of devalued that cash, issuing an enormous amount more debt, $800 billion in them in less than a month. So there you go. So, a quick look at the news. Not a huge amount of news this week. You had US new home sales, sort of quite a bit higher than expected. Housing market sort of seems to be doing reasonably well over there, but this is apparently just because of a lack of supply. Basically, people aren't moving because the US lot get their 30-year mortgages, and so they haven't felt the increase at all of these rising rates, and if they don't move, basically never will. If you've got 15 years left to run on your mortgage, then it doesn't matter. They've put up rates to, 6-7% mortgage rates, that is, because you don't have to take on those rates. Us in the UK get 2-year fixes and 5-year fixes, so, if you took one out 3 or 4 years ago, you could be potentially remortgaging, in the next year. And if that's too much, then you have to sell your house. So forced sellers, basically, where in the US you don't get forced sellers. But interesting to see new home sales sort of higher than expected. So that means people are taking on these higher rates. But there you go. You had the big chiefs sort of talking very hawkishly, it seems, sort of wanting to battle down inflation, job not done yet, and all that sort of thing. Jobs numbers, sort of not a huge surprise. Had the UK house price index slightly better than expected, actually positive for June, from nationwide at least, and the annual number was a little bit less negative than expected because of that. And yeah, that was largely it. The core PCE numbers that the US were sort of basically as expected, annual down ever so slightly, but yeah, I think we want a bit of a bigger move than that. So yeah, that was the news for the week. Not a lot there. So on the portfolio side, you notice a reasonably big drop on here, and a zero on Meta Platforms. Got to $289, sort of twice in the last week, and I thought that was basically enough for me. I sort of mentioned this a few times. Basically, earnings sort of increasing quite a bit recently due to largely layoffs, is not sort of something I see as particularly bullish or sustainable. So yeah, obviously they'll get back to better times, I think, with sort of recession being over in a year or two, and advertisers being sort of more willing to come back there. But yeah, I don't really see sort of anything bullish to hold them at the moment. The Reality Labs seems to be doing pretty poorly. As I said before, not even increasing in revenue. I don't mind losing sort of $3-4 billion a quarter if Reality Labs was expanding heavily, but yeah, they're not even growing in revenue, and it's just going on R&D and development of the new headsets. So yeah, not one that I wanted to hold. Basically saw better opportunities elsewhere. Really good for people who sort of bought in the 90s and have seen basically over 200% gain. So good for them. But that was sold. I've still got the Vanguard Emerging Markets, potentially waiting to be sold. Just looking to get out of the ETFs at the moment, and yeah, hold those later on after the crypto bull run, I expect. And I do need to fill the ISA with something, so I saw the Vanguard Emerging Markets as probably the thing least likely to grow hugely. Could see sort of 10% on it over the next year, but I'm an awful lot more bullish on some of my things in the ISA. So needing to fill up the ISA, I expect that one will be the next to go. But I had a little bit of cash in the ISA, in the invest account as well. So with the Meta sale and that little bit of cash, I've added, I think it was £8,600 to the ISA, and subscribed to Trading212, which I hadn't done. So I've still got a little bit of cash. Didn't quite spend all the cash this week, but added quite a bit to CleanSpark, Kura Mining, and Equinox Gold, and a little bit of Fortuna Silver Mines. So mentioned that, and sold off half of the 3-year treasuries, which I'll probably get rid of the rest in the next week or two. So that was the big trade. Still sort of very keen on Bitcoin and gold and silver mining, basically. So yeah, we'll see where they go. Got the options on top as well. They're obviously taxable if they do really well, but got the nice sort of positions in here, all tax free. So yeah, that's the ISA side, and would expect this to carry on if I move the Vanguard emerging markets over. I can't really see anything that I'm more bullish on at the moment than gold, silver, and Bitcoin. So we'll see. Not a lot of change in the IG trading account. Basically just gold and silver sort of moving about a little, and Bitcoin. So there you go. And you've seen the Interactive Brokers account. Chinese tech sort of hasn't moved a great deal. Baidu has overtaken my Alibaba. There you go. So that's the portfolio for the week. If you're interested in buying some options potentially, I've got my Interactive Brokers link in the description under my link tree. You have to go on there. And then Trading212 have opened up their free share offer again. So if you want to click the Trading212 link and sign up, you can get a free share up to $100. So there you go. So leave your thoughts in comments below, and like and subscribe. See you soon.